Hey, what's up, everybody? It's Darkpool Algo, and today is Sunday, April 18th, 2021. And thanks for joining me on this weekend session. I'm going to build the weekend watch list that we get sent out in our newsletter every week. Probably going to make this video unlisted first for our newsletter subscribers, give them an opportunity, but then I'll release it sometime tomorrow. If you have any suggestions or comments, make sure you hit us up in the comment section below, especially if you've got any picks you'd like us to look at, any tickers you want us to review. And of course, smash that like button and subscribe. So let's jump right into it. Welcome back, everyone. This is Darkpool Algo, and let's just jump right into it. So based on the Darkpool chart setup that we have here, I've picked 4 stocks that I want to go over with y'all. And I'm just going to go ahead and grab them in a single chart layout so that it's easy to see for everyone. All right, I just need to grab these 4 real quick. Put them someplace over here so I know which one I'm talking about. All right, the first one we're going to look at is DISCA. I believe that's Discovery. A couple things I noticed immediately off the bat is we've got net buying on the algo, as that can be seen in this instance here, where we're pretty much straight up. We've got bullish divergence here, where the algorithm and the price have deviated. This divergence will need to be played out. We've also got a cluster of block trade levels coming in right at the 41.45 to 41.90. This is going to act as resistance until it becomes support. Looking at DISCA on the chart, a couple things. My charts may look a little different. This bottom indicator here that you see is one I am trying out. I found it. It's a free and available one, and it seems to do quite a few things at once. Okay, the first thing that I notice on DISCA is that it seems to be had a major sell-off. It looks as if though we broke below the 34 EMA. We are currently in a value area as far as RSI, or the market extension, is concerned. We've got a decreasing, this is the Squeeze Pro histogram combined with the MACD. Looks like we've had a death cross over. I think that's what it's called. No, a golden cross is when it crosses above, and I think it's a death cross when it crosses below. However, we are in, it looks like pretty good shape as far on the daily. With the algo buying the way that it has, I would anticipate this move as more of a, all right, getting used to these charts again, more of a drop, revert to the mean, drop for support again for the next leg up. That block trade level from the 41 to 41.50 to 41.90 fits right here within our Keltner channel resistance that we're going to run into. We've got a weekly bottom coming in as support at 32.60. I'm going to throw up a trend line real quick from low to low. And as you can see, we've got a pretty significant trend line level of support right there. So we're in an area of support. Fibonacci is going to be a little jacked up because of the sell-off. Oh, this is on the weekly chart too, by the way. Sorry. I'm going to go ahead and bring it down to the daily. We've got that H shape, or that H shape reversal pattern forming. We're extremely oversold. We've got a slingshot move setting up on the Squeeze Pro, which means what will happen is, I'll just do a screenshot of this. What will happen is we'll see this kind of half-shaped moon come up, and this next move will be extremely explosive. All of this area in here is just gathering momentum for that move coming out of negative histogram into positive again. We've also got an area here that's extremely oversold. This area here, we'd like for this to come up and break to the upside. We're in a value area of support here. We've got the 200 SMA as well as the weekly bottom as an additional level of support if we're trying to manage risk to the downside. We've got approximately $4 to the downside, and then I'm anticipating a move up to this 21 EMA, so about $7 to the upside. All right, bringing this into Fibonacci. I just need to check this real quick. Okay, it looks like we have earnings coming up on May 5th, so let's always drop a timeline in there so that we know possibly if we're trying to reach a specific level by a certain date. If it's, if it's a 90-degree vertical, that's probably not going to happen. However, if we've got, a 30-degree slope, that's more, that's definitely achievable. So bringing it down to the 15-minute level. Major consolidation here. I'm going to go back up to the 4-hour chart, try to get some fib levels. All right, so this 4-hour chart, Fibonacci, we've got the 4-hour 200 SMA that we're going to run into at resistance, so which is pretty close to the 50% retracement. So what I'd like to see happen is us to confirm support and begin the move upwards. I would definitely be interested in taking a position in Discovery after we break the monthly Keltner channel top and the 50-period SMA on the 4-hour chart. What that does is that puts us in a stacked positive moving averages, as well as momentum being increased from being oversold on the RSI with market extension as well. The slingshot move coming up from the Squeeze Pro, our MACD would be cross positive. Looking to take a position on this, knowing that we've got earnings coming up within a couple of weeks, looking at the options chart, we've only got options for the 21st, which kind of sucks. I don't necessarily like playing options that where the stock doesn't have weekly options. So our price target was the 50, we're going to run into resistance there. I'm going to target the 57 level if that's an option. Looks like 57.50. Very few contracts being sold. These $45 contracts are only 40 cents. That's definitely well within my risk tolerance. I'm going to jump it up one to the 42.50 simply because of the open interest on the 45s. Market makers may try to pin this at that level so that they don't have to pay the $9,000, 9,000 contracts and then the 1,300 contracts for the puts. 40 is another key level. I know that that's pretty reasonable, especially for an options contract that's 33 days out. I'm going to go ahead and drop that one in, and I'm going to drop the $45 one in just to see how they look going forward. All right, the next one I wanted to look at real quick is MWK. MWK on the 15-minute has got bullish divergence from the dark pool algo line that started approximately in this area here, chop area. Looks like we've came down and we have found support in this area here. Looks like we're increasing support at the 23-ish dollar level. We've got net buying occurring pretty significantly. We've got the algo has curled up and found support. No real block trades to speak of. Looking for the divergence target of about 27. So MWK on our daily chart. We're oversold. Our MACD is decreasing. However, it may curl up. We've got this consolidation slingshot forming here on using our Squeeze Pro. We've also got, it's not going to let me write on that. Screenshot time. Okay, we've got the slingshot happening here. We are currently oversold on the market extension. It's very similar to RSI. We've got the 200 period SMA at $18, so we've got $3.60 risk to the downside. We're looking to target this 50 period simple moving average as well as this 34 period simple moving average as a reversion to the mean. Those come in at right around 30 and 35. Fibonacci on the daily is right in line with that 50 period simple moving average level of 35. Coming down onto the 4-hour chart. As long as we can maintain this monthly and daily bottom right at 23.17, which is also another major level of support based on previous support resistance of candlesticks. We've got that here at 22.23. It looks as if though we came down and touched that just last week, as can be seen here. I don't know if I can zoom in much larger. There we go. That can be seen here. As far as trendline support is concerned, gotta go way back here. The stock was $1. Wow, it's crazy. I would probably want to do take another look at this with approximately $4 in risk to the downside for potential $38 in profit to the upside, $12 profit to the upside. Definitely would like to see this form that solid base over the next couple days, allow some of these indicators, these lowered indicators, to consolidate and actually show a bullish direction. Based on the algo, it looks as if that's going to happen. All right, the next one I have is FTCH, FTCH. I've kind of already done this one a little bit, so I'll just walk through it quickly using blue. We've got a double bottom on the 15-minute, as can be seen here. This is that H or W pattern I like to see. Double bottom comes down, comes back up. We found some resistance right at this block trade level, which is at $50.43. Right. Found some resistance there. Came back down, tested the bottom again to ensure that that's going to provide support. And now we're going to look for a move up and through that previous block level. Divergence has occurred at this 53.50 level, and that's what I'm going to target since we've got a very increasing buy on the algo. Reversion there, increasing, net buying with the algo. So the 53.50 level is what I'm going to look at for FTCH. All right, if you notice, a lot of these have a very similar pattern shaping. However, there's a little extra something I want to talk about with this one. All right, we've got this slingshot MACD, or MACD is kind of slingshotting as well. We're trying to get a golden crossover here. Whoa, what happened there? Don't like that. We want no color on those. We'd like this to turn positive. We've got a level of weekly bottom support and 200 period simple moving average right at $46, $47 level. What I was interested in showing you on this one as well is we have got a mid compression squeeze on the daily, the 2-day, the 3-day, the 4-day, a high compression squeeze on the weekly. Our histogram is currently red, but on the 2-day it's turning yellow. So what we'd like to see is this histogram area turn light blue and these squeeze to fire to give us a larger than expected move to preferably to the upside, but based on where the moving averages are, that will have a lot to do with the direction once the squeeze fires. If we were to look at a previous squeeze level, it's not letting me write on it. We've got a previous squeeze level in this area here that fired, and when that fired, you can see the greater than expected move to the upside because these these moving average indicators. So we can do this. We're stacked positive. The 8 on top of the 21, on top of the 34, on top of the 50-day SMA, on top of the 180-day, or excuse me, the 200-day simple moving average. Nope. Let's see. I need to get rid of some of these. As far as trendline support is concerned, we've got trendline support as well as 200-day rising simple moving average. Our 50-day moving average is falling. I would target the 50-day simple moving average at the level of 59. I've gone ahead and thrown some Fibonacci levels on here before. I'm going to go ahead and get rid of those, throw some new ones on, see where we're at. So if I went from high to low, that 50 period simple moving average is sloping down, so I'm going to target the 50% retracement at 57.50 and then 61. Risk to the downside from our current level is the 200 period simple moving average, which is $3 or 6%. Potential to the upside, which is the 34 EMA, which is what I usually consider reverting to the mean, is 10% or $5, with this 50 period simple moving average at 16% upside or 965. We have earnings coming up in the future on May 13th. Looking at the options chain, again, another one that has monthly options I'm not super happy about. However, the algo is giving me a strong indication that this could be a potential play. As long as we maintain support, we've got 57.61 are my targets. The 50, 55, 60s. As y'all can see, this $60 level has got greater open interest than volume, which means that more people have bought multiple contracts than single contracts, almost 2 to 1. I would anticipate them trying to pin this at the $60 level, where it's either going to be 60 or 50. I would probably see them pinning it at 60 because of the algo and the move, the $7 market make it move, marker or make it move that's anticipated. So that would put us at 52. I'm going to go ahead and target. I like the $60 option. My risk tolerance would allow for the 55. However, I'm going to let this base for a couple days and see, as long as we can confirm support, and then we come back in and look at it. The last one that I have on the list is XOM, XOM. Okay, we've got several block trade levels that have come in. The most recent block trade is the 16th at noon at this 56.83 level that is currently acting as resistance. The algo has been net buying since the 8th. We've got positive and increasing algorithm. We've got a block trade target level at 57.36 that came in on the 16th in the morning. As you can see, it didn't provide a whole lot of support or resistance. I believe that there was probably a ton of profit taking in this area here. We've got block trade support 57 or 56.50. Looks as if they were trying to form that H pattern where we would come down, test support, come back up, test resistance, come back down, test support in this generalized area here for the next leg up. Looking at XOM on, sorry about that. Looking at XOM on the daily chart. Looks as if though we came down. This is COVID. Came down to COVID, came up, didn't quite make the 200 SMA, came back down, sold off. This is Exxon Mobil. That makes sense. They were, if I remember correctly, they were unincluded from the NASDAQ here in August. So they came down, they found support. We've got earnings coming up on the 30th. We are currently in an uptrend. Uptrend support. Trendline support is in line with the 50-period simple moving average. We have got stacked positive EMAs. I'm going to drop this down to a 4-hour chart so that we can see a little better what's going on. There we go. We've got stacked positive EMAs on the daily. We're consolidating between the 50 and the 200 SMA while they kind of fight it out to see what's going on. We're currently in a value area with a decreasing histogram and MACD. What I'd look for is this daily top 56.43 or 56.50 to hold as support. A break of that, which would indicate the next leg upward. We would like to see the 50 period SMA get above the 200 period SMA for a move up to this daily top, which is at 58.50, for another move to 59.50, and a final top at 63. We have approximately a couple weeks till earnings. Looking at the slope of the trend, knowing that Exxon has $1 ATR, average true range, for it makes about $1 a day. This $59 level, I believe, is achievable. So $59.50. If this squeeze that's currently consolidating on the daily, this high compression squeeze, fires with this yellow histogram, we can anticipate that squeeze to last for, so we have a high compression squeeze on the daily, we've got positive yellow histogram. If that squeeze fires, we can look for a period of 8 to 10 days for that squeeze to continue. That would put us right before earnings. So that would be next week, the Friday of next week. So next week's expiration, waiting for the squeeze to fire, I may look at a $63 level as well. Got to run into earnings, squeeze that's about to fire, slingshot that's about to release. We've got increasing market extension. We've got net buying on the algorithm. Let's look at the options table for 63. We have weekly options. Earnings was on the 5th, I think. Is that what I said? Oh, earnings on the 30th. Earnings on the 30th, so we have an expiration. So you can see the IV is higher for that day. Over here in this, on the right hand side, the 35.46% implied volatility will always be higher going into earnings. $3 expected move. However, with the squeeze, if it fires, we can anticipate a larger than expected move. So 59.46 is the expected move. I'm going to look at the 60s. Those are super cheap. Oh, they're all pretty cheap for that's this week. Let's look at next week's. All right, $60 target, 39 cent, 4,000 open interest. Not a ton of put open interest. My risk tolerance would allow me to get some more positive delta, so I'd probably go for the 50 deltas, or even possibly I would look at these 56s. I'm going to put the 56 in, and I'm also going to put in the 57s and see what kind of move we have going into the week. If that squeeze fires, I'm definitely going to load up on some options plays. All right, that's it. I was able to get through all of these pretty quickly. Thanks again for joining me. Make sure you smash that like button and subscribe for additional content. If you have any questions, make sure you hit me up in the comments section below. The other stocks that I was looking at, if you guys can see them over here on the right, would be Johnson & Johnson, CarMax, Twitter, VRM, JD, EOG. That would be Johnson & Johnson, KMX, CarMax, Twitter, VRM, and JD. I believe Dark Pool Charts is going to do a review of JD. So, all right, that's it for me. Thanks for joining me, and we'll see you soon.